Good morning. Good morning from Los Angeles, specifically Pacific Palisades. This is actually a friend of mine's house. Good morning. Welcome to Power Hour every Friday, 10 a.m. Pacific, 1 p.m. Eastern. Well, we finished 2024, so all the supporters, members, subscribers, thank you so much. I'm wishing all of you and a very healthy, happy, and a prosperous 2025. 2024 was a good year. I will share with you my results at the end of the segment, and then we'll do live Q&A, share my current positions and my predictions for the stock market, my predictions for Bitcoin, and a few other topics. And I am thrilled to be here, that many of you can join. So let's start with a little bit of business to take care of. So I do 2 live streams every week. Mondays called Trading with Sergio, Monday mornings, 10 a.m. Pacific, 1 p.m. Eastern. Then there is Power Hour, obviously, 10 a.m. Pacific, 1 p.m. Eastern, where I get to discuss a few topics that are relevant and also share my position screens. Another thing I've been doing for about a month and a half now, it's a new channel, so about 5-6 months old. I'm posting on the YouTube community page, I'm posting my live open current positions for everyone to see. I'm running this channel with full transparency, just like I run the other channel that most of you know me from. But I think transparency is what's lacking in the internet and actually YouTube. So transparency is the way I'm going to deal with it. Winners, losers, whatever they are. And again, none of this is trading or financial advice, right? If you're going to follow me, follow at your own risk. So I am posting my positions Mondays, Wednesdays, and Fridays, latest by 2 p.m. Pacific. And go check them out. And you can put them together. You can put them together if I made money or lost money by following the positions, or if you want to tag along, again, tag along at your own risk. This is not trading or financial advice. So, Trading with Sergio, Monday mornings, 10 a.m. Pacific, 1 p.m. Eastern. Power Hour on Fridays, 10 a.m. Pacific, 1 p.m. Eastern. One other thing that I'm doing on the channel, like I'm trying to pay it forward. I'm trying to share my experiences, good, bad, sideways. But more importantly, I'm trying to share my experiences and trading expertise, let's say, over the last 30, 35 years. And I am thrilled to be able to do so. The important thing is information and education. That's power. Hopefully, you all tune in and learn something, right? I'm not trying to give you guys a fish. There are a lot of YouTubers out there that go like, oh, I made $1 million here, I made $1 million there. I don't know if it's verified or not. But the important thing is to learn, to educate yourself. So again, not giving you a fish, but trying to teach you how to fish, because this is not an easy thing to do. Trading is not an easy thing to do. So with that said, one last thing. Channel is open for members. Obviously, I think I have 21 or 22 members. I appreciate the support. They have more access to me, more hands-on access, and what I do is, as a perk, 2 things. One, I do live streams specifically geared to the members only every Wednesday at 3 p.m. Pacific, 6 p.m. Eastern. Once a week, we talk about their setups. We talk about ideas, exchange of ideas. They learn quite a bit because it's a lot more like one-on-one. I wouldn't say coaching, but it was like more mentoring. And then, I'm trying to stop them making the mistakes that I've made all along. And if I can do so, great. So to become a member, all you have to do is go to the YouTube channel, click join. So not only you get 4 extra live streams as a member, but you also get this t-shirt that I'm wearing, #KnowYourWorth. It's free. It's supplied by gigwithit.com, which is the official supplier of the merchandise supplier of the channel. And it's like a little thank you for becoming a member. Free shipping. All you have to do is send me an email, sergio@sergioavedian.com, and your t-shirt size and your physical address, and you'll get it. So I think you're getting me for a bargain. So 4 extra live streams. So I think we're done. So 2024 was an amazing year. Okay. If you lost money in 2024, you should stop doing whatever you're doing, because you could have thrown a dart, right, and made money. Although it was concentrated, right? The Mag 7's top 10 stock, 10 stocks, 15 stocks in the S&P 500 basically lifted the indexes to, I lost count at 55. I don't know how many all-time highs we had, this year. Last Santa Claus rally did not show up. Big deal. The last 2 years, market's up 50%. Okay. So what do I talk about it? If you're not a trader, I am a trader, but I have different portfolios, different investments. I have a long-term investment account, right? I did amazingly well there. My trading account, I'm going to share with you with the percentages and dollars and everything else right at the end of the episode. So stay tuned for that. So you couldn't have a better 2 years, right? Since the Fed stopped raising rates. Why did they raise rates, right? Well, they raised rates because they created inflation. It was man-made. Why was inflation created? Look, justifiably so. Pandemic showed up. They printed $7 trillion and pumped it into the economy. Well, simple definition of inflation is too many dollars chasing too few goods. And 7 trillion is a lot of dollars. So, I feel bad for Mr. Powell, the Federal Reserve Chairman, because he's kind of stuck in a box now, and the Federal Reserve as well. They just put themselves in a box. I'm hoping that nothing breaks at the end of this. Markets says everything is fine. Today we're rallying strongly. But the bond market is not listening to the Fed. Whatever Fed is trying to sell, bond market's going like, nope, we're not listening. And I've done a lot of content about that, so please go check them out. They're on the channel. There is a problem in this country. The problem is we have a broken fiscal policy. Okay, it's broken. Without a question, it's broken. And to follow that, we make sometimes things worse with a broken monetary policy. Unfortunately, though, from what I believe is monetary policy follows fiscal policy, right? Fiscal policy is so far created $36.2 trillion in national debt, because we print and we spend the money we don't have. If I ran my household the same way, I would be bankrupt 10 times over, because I don't have a printing machine that I can make up the deficits. I just don't, right? That's not how budgets are run. Well, the U.S. government does it. We love spending money we don't have. And what does the Fed have to do? The Fed has to issue bonds, notes, T-bills. They jacked up the rates. Now just the interest only on that 36 trillion, to be 37 trillion in about 74 days. I'm keeping count. Because every 100 days, our debt goes up by $1 trillion. Talk about broken, okay? That's money that's never going to get paid back. Never. But we can't keep borrowing from the future generations. That's what we're doing. There was a tweet actually that I saw that every unborn child in this country is coming, is born with $120,000 worth of debt. Every single man, woman, child has $120,000 in debt. That's because of the 36 trillion national debt, and the deficits are, as far as the eye can see, $2 trillion a year. But now to add to those deficits, the interest costs on those deficits is skyrocketing. It's $1.2 trillion, just the interest cost. Actually, the interest cost on our debt, the IOUs that we put out, is more than Social Security, is more than defense. Think about it, people. Why do we need to pay that much interest? Well, that's because you have $36 trillion in debt. So, as I said, like previously, Fed has put themselves in a box. Fed says, we killed inflation, we raised the rates, we're doing fine. Inflation is going to our target of 2% with full employment. Bond market, from the day they started easing rates, cutting the Fed funds rate, bond market goes, no, we're not buying any of that. And what did the bond market do, or is doing? Bond market is raising rates. Now, I've just put out a video called Fed has lost control of the bond market. Without a question, they have. I mean, Fed's powerful, but they're not powerful enough to dictate to the bond market. And we all have to watch that. And the 10-year note, from the day they have they have started cutting Fed funds rate, the Federal Reserve has started cutting them. We had 3 cuts. The first one was 50 basis points. Second one was 25 basis points. And we just had one a couple of weeks ago, another 25 basis points. Well, since the Fed has started cutting rates, total of 100 basis points, the 10-year note has gone up in yield by 100 basis points. Completely diametrically the opposite of what the Fed is trying to do. Why is the Fed cutting rates? They see trouble ahead. They see economy slowing down. Plus, they want to bring down the interest cost on this 36 trillion in debt. Who needs lower interest rate more than, the Fed? We do as a consumer, obviously, but it doesn't reflect on us because the bond market raised the rates by 100 basis points while the Fed is, attempting to lower rates, and mortgage rates are back up to, on a 30-year fix, we're back up to 7%. Home affordability is in the toilet. So bond market is not buying it. What bond market is seeing is that bond market is seeing inflation coming back. And I'm going to talk about inflation, going back to the 70s on the next couple of segments. Bond market is not seeing anything that the Fed is looking at. Bond market is reading right through it and saying, well, inflation is coming back with a vengeance. We need to raise the rates. Plus, all the new buyers of this debt that we have to issue, replacing the matured debt that we have by the trillions, they're going to require better returns. There's no ifs, there's no buts. And that's what the bond market is doing. So Fed has definitely put themselves in a box. Mr. Powell can all say, oh, I don't see stag or inflation. I talked about that about a month ago, stagflation. I hope it doesn't happen because there is no cure for that thing. Stagflation is stagnant economy with high inflation. Okay, we really don't want that. So the stock market is not looking at the bond market yet, although it started kind of paying attention to it, or the deficits, or the debt. Stock market's just, I'm going to give you guys my prediction for the stock market. Nobody's going to be right on that, but then I'm going to take a chance and give it a crack. Okay. So I am, this situation is definitely noteworthy. Is inflation going to come back? Are we going to, see stagflation? I don't know, but I think 2025 is going to be a lot more of a volatile year than 2024. That's what I believe. So if you are, with that opinion, put it in the chat. I will answer all the comments and questions on the chat at the end. I am very interested in what's going to happen with what the Fed is trying to do. Fed is trying to lower rates. The market's raising rates. I have not seen this before in 33 years of following the markets and trading and whatever not. So we'll see how this all is resolved. And it is fascinating to me that, and then part of the reason that I am bullish on Bitcoin, okay, and you guys have done a lot of content on Bitcoin. I don't follow other ones. Look, I do know about them, Ethereums and Dogecoins and some altcoins and whatever. But to me, Bitcoin is the only one that I need to follow, because pretty much everything moves off of Bitcoin. Yeah, there are some meme coins that go up and down, but I have enough to do. I don't need to follow any of that stuff. But so most of you know, I'm bullish on Bitcoin. I've been bullish on Bitcoin for a while. Well, I've owned Bitcoin for 6 years now, 6.5 years. I've not added to my Bitcoin position in 6 years. But this year, I started dollar cost averaging, literally at 95,000. I'm doing $100 a week, dollar cost averaging up, actually, like Michael Saylor is doing. But what has happened with my Bitcoin position is that initially when I bought it, there was a lot of risk. So I only put like 3% of my net worth into Bitcoin. I go, if I lose it all, it's gone. It's fine. If the government shuts it down, fine. Well, that's all that threat over the last year actually has been nullified. We have BlackRock in there. We have Fidelity in there. We have talk about nations getting in there. We have, we know what MicroStrategy is doing. I've done enough talk about MicroStrategy and Michael Saylor, so you can go check those videos out. No need to extend that. But Bitcoin is the only fine asset. That's why I like Bitcoin. The other thing I like Bitcoin is, I'm not looking at it as a true inflation hedge, but is it digital gold, digital currency? A lot of people say, Serge, what good is Bitcoin? You can go buy a cup of coffee at Starbucks with Bitcoin. I'm like, that was not what it's intended to do. Maybe there will be some products coming along, which I believe there will. There will be some, mortgage-backed securities, created through Bitcoin. There's a lot going to happen in 2025, I believe, with a very friendly crypto administration, obviously. And obviously, there is talk that the U.S. Government is going to create a treasury asset out of Bitcoin. I don't know. Those are all rumors and threats. So where do I see Bitcoin going? This is my prediction for 2025. Well, if you've been watching me long enough, going back to, 6 months, 6 months, for 6 months, 7 months, Bitcoin went sideways. Well, not sideways, in a trading range, right? Between 52,000 and 70,000 after it had the initial move from 40 to 75,000, right? And okay, well, according to Kalshi is the betting site that people bet on. How high will Bitcoin get in 2025? Prediction markets see base case of Bitcoin hitting 137,000 in 2025. This implies another 41% upside from current levels and would put Bitcoin nearly 100,000 higher than where it was January 2023. Okay, so I have my opinions about this. A lot of people are saying, oh, it's going to go to million, it's going to go to 10 million. I'm like, look, I can't make that stuff. I can't with a straight face say it's going to a million. Ultimately, in 10 years, maybe longer. Is it? Yeah, because there is only 21 million. It's a supply demand thing. What happens to a finite asset when everybody's, unless they can make more Bitcoin, which I've done videos about that as well, I think it's going to be higher. Yes, it is. One other thing that I'm seeing about Bitcoin lately is that the volatility is coming out of it. We're seeing this wild moves, right? 10,000 to 60,000, back to 10,000. That's not going to happen anymore. Because I think it kind of was proven after the halving that we have last April. It literally went in a trading range sideways for 7 months, and then it broke out. So I'm a technical kind of guy. I look at fundamentals, obviously, on stocks, but on Bitcoin, I'm just looking at pure technicals, okay? So we went from 40,000 to 75,000, went sideways for 6-7 months, and then broke out. That may have something to do with Michael Saylor buying hundreds of thousands of Bitcoin, obviously. I don't want to talk about that in this segment. And then we cracked 100,000, went to 107, pulled back to 92, gave 92,000 a couple of shots. I believe that we're back in a higher level of trading range now, between 92 and 105, 110, let's say. And that's what we're going to do. But that's less volatility than we had in the past, right? We didn't go up fivefold, go down 50,000, all that stuff. So I think with the stronger hands coming in, with the public coming in with these ETFs, and with the finite asset that we're dealing with, volatility is getting sucked out of it. That's why Michael Saylor created his infinite money glitch, with MicroStrategy, he added volatility that way. Again, it's reasonably volatile, but then when Bitcoin went from 107 to 95, people like writing articles, oh, Bitcoin is crashing. I'm like, it's a 10% correction. NVIDIA and Apple have 10% corrections. I'm not sure why Bitcoin should be any different. But anyway, so my prediction is this. I think we're going to go sideways for at least a couple of months here, if not longer. Digest the gains that we had from 70,000-ish, 68 to 107, which was a big jump, right? I think we're just going to go sideways, which is fine with me. You know, it will help my DCA actually, the $100 a week that I'm adding, because to be perfectly honest, with the appreciation, it is close to 12% of my net worth now, and I'm never going to sell it. Bitcoin, I'm not going to trade it. I'm never going to sell it, period. I'm not one of those hodlers, YOLOers, or whatever. Bitcoin is not to be traded. You just buy it, put it in your cold storage, and move on. And so my prediction goes sideways for at least a couple more months here in a trading range, let's say 92 to 105, 104, 107, whatever, and then have the next leg up. And the next leg is going to come with a catalyst. What is that catalyst? Is it going to be the US announcing they're putting Bitcoin as a treasury asset, like Michael Saylor has done? Because a lot of companies like Marathon and Ride Blockchain, and they're all doing the same thing. A lot of companies, a lot of public and companies are duplicating what Michael Saylor is doing, right? Issuing debt, issuing stock, and buying Bitcoin. Well, these are strong hands, right? I mean, weak hands are getting eliminated. So more sideways action. Next catalyst comes. I see Bitcoin going to 150,000 by the end of 2025. It may not end there, but I see it getting there. And long term, I'm a believer. I mean, hasn't proven me wrong. It's been around. I think today's the anniversary. It's been around for 15 years, since 2009. Hasn't been hacked. Nothing bad has happened to Bitcoin, and there's less and less of it. Mining of it is getting tougher and tougher. So I'm a believer. I mean, I'm a believer until proven otherwise. 12% of my net worth is pretty high, but then it's going to go higher because I'm never going to sell it. I'm just going to DCA into it again some more this year. And the catalyst, I think, is going to be if the U.S. government does what is hypothetically, U.S. government is not going to come and buy like 5 Bitcoin. Okay, if that happens, that is the biggest catalyst. But there are other catalysts, right? Michael Saylor is going all in. He's issuing the war chest. He's trying to increase the war chest, right? I did a video about that, how he's increasing his authorized shares on common shares and preferred shares. He's putting in billions into this. You guys got to pay attention to it. It's a lot of money. A lot of people call it a Ponzi scheme. A lot of people call it a gambler or whatever. The guy's made his bed. He's going to sleep in it. I give him kudos. I mean, conviction is conviction. I'm not going to argue with him. But more importantly, that's my prediction. So we will get to 150,000 this year. We may not end up there, but that's going to be the next leg up after we go sideways for probably a few more months, couple more months, probably until the end of March or so. And so that's it. Let's see. I'm not going to take this video down. Obviously, you guys can hold me to it, because these kind of predictions are what? They made a fool out of you. They're just always wrong, right? But just like Wall Street is wrong, when I talk about their predictions coming up on the markets, which I'll add that as well. So as we know, what happened during the pandemic? We were all stuck at house. They printed $7 trillion, sent money to everyone. Since then, actually, people have been hoarding that cash, right? Most of it has gone into the ETFs, obviously, in the market. But there is a put, actually, for the stock market or for other assets, okay? That's called the total assets in money market funds. I'm sure all of you know what money market funds are. I'm sure if you have a Robinhood account, you get APY of 4.5. You were getting 5, now it's down to 4.5. It's going to go down to 4 shortly because the Fed is cutting rates. So Robinhood will lower the rates on that. If you have a Robinhood Gold account, you're getting 5%. I mean, is it enough to save your butt from inflation? No, but it's better than nothing, better than zero that you were getting for 15 years under ZIRP, right? Well, we're almost hitting $7 trillion in money market assets in this country. 7 trillion. That's a lot of money on the sideline. What is that money going to do? Is that going to come into Bitcoin, some of it? Is it, or ETFs, stock market? Because the lower the rates go on the money market funds, it's going to look for a return. But one way or another, the net assets in the U.S. money market funds have hit a record of 6.75 trillion over the last 5 years, which started with the pandemic. You guys can see it right here in the chart right here. This takeoff right here. People started, saving money in money market funds, which is great. Over the last 5 years, it has doubled. Since the Fed starting raising rates in March in 2022, 2.2 trillion has flowed into these funds. Even as the Fed is cutting rates by 100 basis points, capital is still flowing into money market funds. Well, look at it. I mean, look at this chart with the circle I put on the right-hand side there. We are right at $6.75 trillion in money market funds. That money is going to chase return at some point, right? If the Fed keeps cutting rates and consequently the money market rates start going lower, that money has to look for a return. And that money is going to come out of money market. It's going to go somewhere. Imagine some of it goes into Bitcoin. I can imagine some of it goes into some stock ETFs, individual issues or whatever not, or real estate. So there is a lot of firepower on the sideline. The firepower is going to be used at some point, or people are just going to hoard it, right? And I don't know. I mean, people seem like hoarding is the right thing. I don't know if it's the right word or not, but look, they're getting 4.5%, 4% on a money market fund. What is our inflation rate in this country? It's not 2% like the government gaslights you and tells you about. It's about 6, 7%. So nominally, you're still losing some money, but it's better than, losing 6%. You're just losing 1%, 1.5%, because the currency is being debased. Currency is losing value every single year. When I say currency, because people say, Sergio, dollar is as strong as it's ever been. Yeah, because it's the global reserve asset. I get that. But that's not the issue, though. The buying power of your dollars is being lost by 6 or 7% every single year. That's because of the debasing of the currency. That's because of us printing and spending. That's because of the national debt. All these things make a difference. Otherwise, look around you, people. Look around you. Look at all the hard assets. Real estate, all-time high. Unaffordable, I get it. All-time high. Gold, all-time high. Bitcoin, all-time high. Stock market, all-time high. Proof is in the pudding. And the 7 trillion may start chasing some of that. Now, that may be the top, but I doubt that all of that is going to go into the stock market or Bitcoin or any other asset. But there is definitely a put with that $7 trillion in in money market funds. So it's going that may add some more to the volatility actually that I'm expecting to pick up in 2025. So talk about volatility. How about the stock market, right? Let's talk a little bit about the stock market. Since the Fed stopped raising rates in 2022, okay, we're just got into 2025. The stock market, well, the index is S&P 500, the top benchmark, let's say, is up over 50%, 50. You're going to say, well, that can't be repeated, and that's going to never happen again. Well, yeah, no, never is not a good word to use when it comes to the markets. But stellar 2 years. If you just dollar cost averaged last 3, 4, 5 years, I mean, well, your account has got to be happy. Your bank account is going to look great. Your brokerage account is going to look great. Just DCAing into an index, okay? And you don't need to beat the benchmark. The benchmark, nobody can actually, not nobody, but a very few, maybe 95% of asset managers cannot beat the benchmarks, okay? I'm going to talk about that during my last segment when I'm showing my accounts. If I did beat the benchmarks, what do you guys think? Did I beat the S&P of 25% this year? You guys think I did? Put it in. Actually, let's do this. For however many of you are here, put it in the chat. Put my final percentage return for 2025 for my trading account. My long-term investing account did ridiculously well this year, okay? Actually, it's better than my trading account. But then I had a couple, 3 gems in there that I was lucky enough to find, figure out, and hold on. I held a couple of them for a year and 5 months, so to get into long-term capital gains situation. But the market is, for the novice investor, long-term investor, has done wonderful, right? 10, 11% a year. But last 2 years, that got turbocharged. We're 25, 26, 7% last year, 23, 25% this year. Well, yeah, I'm glad you're putting the percentages in there. You guys will see what my percentage was. And then I compared it to the indexes, actually, so you guys will see it. But the markets, to me, the important thing about the markets is, you know, you can't keep doing 23, 25% every single year. You just can't. There's law of averages. So S&P finished the year about 24%, 2024, and it was 24.2% gain recorded in 2023. Okay, we're almost 50% for 2 years. So this happened one other time before. Okay, in 1997 and 1998, the annual return was 31% and 27%. See, it does happen. So these boxes I put around the bars are those 2 years consecutive over 20% returns. It has not happened for too many times. And then the down bars, the gold bars, are down years. Okay, so most of you may say, well, it's not 50%, it's not going to go up again. I'm like, well, I'll give you guys my prediction on the next segment, I think, about where I think the market's going to be, just like I made probably a fool out of myself and gave you the prediction for Bitcoin. Subsequently, the index, after the 97, 98, 31, and 27%, climbed 20 more percent the next year before the 2000 dot-com bubble, and then we know what happened then. So our stocks set for another strong year. Well, on the next segment, my prediction is going to tell you guys if I think the stock market is going to do well this year. And we'll hold that for I'll do one more segment after this, and then after that, my prediction, and then my year-end results. I'm going to show you guys those, my expectations. So yeah, I'm telling you, people, just dollar cost average in an index is just going to be okay. You know, just put $100 a month, $100 a week, whatever you can put in there, just DCA. You know, look, you can be a trader, you can have a trading account, you can do well. Most traders don't do well. You know, the advertisers, they're doing well. I have nothing to hide, full transparency. I put my losses, I put my gains on the YouTube channel. I mean, you know, I'm not doing it for YouTube dollars, but my goal is just inform, educate, and pay it forward. But one thing that I've been talking about for the last, I don't know how long, 6 months, 5, I don't even know when I started the channel. I think I started in May. I think it was like 6, 7 months. And I talk about inflation quite a bit. I talk about, and so I saw a tweet on X and I pulled it. It looks, it was a comparison going back to 1970s. Okay. And incomes, have your incomes kept pace? I mean, look, some of you are not that old, obviously. So, but you need to have a sense of history. You need to have a sense of where things were or when things are today. Okay. I'm old enough to have experienced a lot of this. I'm old enough to have experienced the massive inflation spike in the 70s when Volcker raised the rates to 20%. You guys think 5-6% rates are high? 7% mortgages are high? Well, you should have lived through that. Originally, when gold had hit 800 and inflation was running at 15%, the U.S. bond market, the Paul Volcker, then rest in peace, Federal Reserve Chairman, raised the rates to 20%. You could have gotten 20% on short-term bills. Think about it, people. So when the Fed raises the rates from 0 to 5, people go, "Oh my God, rates are so high." I'm like, no, historically, actually, 5 is pretty average. But so I said, this is going to be a good tweet to talk about where it's been like, kind of nostalgia, go back and forth, and on certain items, how inflation has hurt the average American consumer and us, all of us. So, Fred Krueger is a PhD at Stanford. I'm pretty sure. I follow him on X. So he put up this list, and I thought it was fascinating. And I'm pretty sure he fact-checked all of the stuff. In 1971. Okay, now we're going back a while. We're going back, what, 50... I was 4 years old, so 54 years. We're at 2025. I keep forgetting we're in 2025. Okay, so a gallon of gas costs 36 cents. Today, $3, up 8x. In California, it's more like 4. A slice of pizza in New York, this is all 71 compared to today. New York slice, beautiful New York slice, thin crust, costs 25 cents. Today, $5. I'm pretty sure you can get it for less, but that's up 20x. Big Mac cost 65 cents in 1971. Today, $7, up 11x. Fine dining for 2 costs $30. I don't know about that. I think that's a little high even for 71. Today, $300, which is probably talking a Michelin star restaurant. Stanford, because that's where he went, Stanford costs $2,400 a year. Today, $66,000, up 26x. Dental checkup costs $20. Today, $200, up 10x. A 2,000 square foot house cost $27,000 in 1971. Today, $425,000, up 14x. 5-star hotel in 71 supposedly cost $60. Today, $700, up 11x. Doctor home visits, which we don't have obviously anymore, cost $20. Today, $300, up 15x. A Ford F-100 pickup truck cost $2,400. Today, the same truck, the F-150, costs $36K. I think it's low. It's probably higher. So, but then he followed up with the tweet of incomes, what has happened since 1971. So federal minimum wage was $1.60. Today it's $7.25. Nobody gets paid federal minimum wage. That's up 4x. Average office worker made $10K in 1971. Now he or she makes $74K, up 7x. The average starting salary for engineers was $10K. Now it's 76x, up 7x. Basically, if you guys can see, the incomes have not caught up or have not gone up as high as certain items that have on the left side. Okay, so basically, the salaries are up 4 to 9x unless you're an investment banker. And he says he couldn't find any salary category that went up more than 10x. While everything else on the left-hand column has gone up, some of them have gone up 20x. So, with that said, what do you guys think? How's inflation for you? I think inflation is a tax on the American consumer, American public. And I think it's horrible. It's man-made, without a question, especially in our case because of our debt. Right? You just keep printing and spending and printing and spending and printing and spending. That's what's going to happen. Milton Friedman, rest in peace, said that inflation is man-made. It's not in nature, right? Inflation is man-made with horrible, broken, like I spoke about on the first segment, broken fiscal policy followed by broken monetary policy. And I know from myself, okay, 6-7 years ago, I love Costco. I love the company. I love their culture. All right, look at the stock price. I mean, if you own Costco for the last 6-7 years or dollar cost averaging in Costco, you're doing so well. Okay, Costco is my inflation fighter, let's say. Okay, I run a household of 4. Well, I go to Costco probably every 10 days or so, every couple of weeks. And, I intend to spend 200. I come out spending 500 every single time. But there's a reason for that. 6, 7 years ago, when I went to Costco with a $100 US bill, $100 bill, right? The C note, famous C note. I was able to pick up probably 11, 12, maybe 10, 12 items because they were all priced at $6.99, $7.99, right? That's Costco. You all know that. You all know what I'm talking about. Now I go with the same looking $100 bill. It still says $100, right? How many items you guys can pick up at Costco today? The same items. How many of those you think you will be able to pick up? Not only the packaging is smaller, but they're all priced at $14.99, $15.99, $12.99. So 6, 7 years ago, I could buy probably 10, 11 items with my $100 bill. Today, I can maybe buy 5, 6, maybe 7 items with the same $100 bill. Right then and there, that shows where your buying power has gone. Right then and there, right? Everything we're buying. Well, his list, Mr. Kruger's list, did not include healthcare. It did not include education. Well, it did kind of on Stanford, but even on, public universities, right? Not every insurances, home prices, rents. If you figure all in, is your salary keeping pace with inflation? If you're a regular Joe, W-2, is your salary keeping pace with inflation? I don't think it is. And, we'll see. Because if the Fed keeps lowering rates and inflation comes back, we're in trouble. Everything I'm paying, I know from my budget, everything I'm paying for has doubled, tripled over the last 4 or 5 years. Well, what has gone down in price? I don't know. From food to clothing to services, everything has doubled, tripled. So, yeah, inflation is a bad thing, and once it's in the system, it's really difficult to get eradicated, get rid of it. But hopefully, you guys will watch me and make some extra dollars and pay for the extra costs you're incurring because of inflation. So here's my year-end, prediction coming up on the indexes. This obviously I just talked about it, right? 25% 2023, 24, 25% with the sell-off that we had, 5, 6, 3, 4% last week of the year. Without that, it would have been, over 50%. I think we're just a tad over 50 or under 50% for 2 years. And there were a lot of predictions made. Nobody was right, except Tom Lee of FundStrat. He's always bullish. He's a perma bull. He's always bullish. You watch him on CNBC. He was saying, look, the guy's dead on. He's been saying for 2 years, he's been saying buy every dip. You can't argue with success, man. The guy is dead on. I mean, if you follow Tom Lee, there are reasons for that, by the way, because the government cannot allow the market to go down. It just can't. Everybody's pensions is in there. Everybody's 401k is in there. It just can't allow the market to crash. But then the people who have $7 trillion in money markets want to crash so they can buy stuff cheaply, right? I mean, look, we had corrections, but buy every dip going back in history has been the right thing to do. And so Wall Street put out predictions. I'm going to put out my predictions right at the end of the segment, but I want to show you guys what Wall Street is thinking going forward. So Wall Street predictions for the market and economy in 2025. All right. So Wall Street average S&P 500 forecast, right? Let's assume S&P 500 is at 5,900. Not assume, but we are there. 14%, okay? So on the right-hand side, you guys have all the major names: UBS, Goldman, Morgan, Citi, JP Morgan, Evercore, Barclays, BofA, BMO, HSBC, all these people, right? All right, so let's say we're at 5,900. S&P outlook, for them, first of all, nobody has an outlook that's below the current market price. Nobody. So this starts from least bullish to most bullish, okay? UBS is saying we're going to end the 2025 at 6,400, which is up 8.8%. Goldman is saying 6,500. Morgan saying the same thing. Citi saying the same thing. JP Morgan is saying the same thing. Evercore is 66. Barclays is 66. Bank of America, I don't know. It was being a joker. Put the quadruple 6 there. I'm like, okay, whatever. HSBC is 67 and goes up and up. And the most bullish one is Oppenheimer at 7,100. Okay. So pretty much everybody who is somebody on Wall Street is saying market's going to go. And on average, the average for all these is 14%. That's a damn good return year, right? After 2 years of 20+% returns. And that also coincides with that graph that I just showed you guys, right? After 2 strong years, the third year is pretty good. Then after that, we peter out. But, okay, here's my prediction. Definitely going to be higher volatility year. There are ways to protect yourself, obviously. I am looking at earnings, right? The earnings potential of the S&P 500 is pegged right about $260. Okay, $260. The multiple is high, so I'm still has to stay with the high multiple because the Fed is cutting rates. On an interest rate cutting cycle, you can't put a lower multiple on it. So at the moment, we're about $210 in earnings. Okay, the estimates, low estimates are about 250, high estimates are as high as 275, 280. So if you take the S&P 500 divided by, let's say, 270, okay, we're looking at like 23 PE, price to earnings ratio, and S&P 500, 23 is pretty high. Average has been 17, 18. So there's a lot of downside here, if the downside happens. But if the earnings are going to be about, even at 250, my prediction is market's going to go up, not average 14%. I think we're going to be, from where we are, where we finished the year, I think we're going to go to 6,500. Well, hold me down to it. 6,500 as a high. And I think we're going to finish the year at 6,300 on the S&P 500, which is about 7% higher than where we are now. But I think we're going to go higher initially, 6,500, which will put us about 13, 14% higher. Is it going to be another 20% year? We never had one in history. Could be. I mean, if Oppenheimer is right, we're going to have another 20% year in 2025. What are the headwinds? A lot. Inflation coming back, Fed stopping cutting rates and start raising rates because they made a mistake cutting rates to start with. Deficits soaring. Okay. Government spending getting shut down because we know about Doge, right? With Elon and Vivek. There's a lot of headwinds. There's potential, hurdles out there. If you cut spending, government spending too much, that will put you in a bad situation because 80% of our economy is on consumer spending and government spending, right? We don't manufacture much. Another headwind is going to be the strength of the US dollar. US dollar keeps getting stronger and stronger and stronger. That could be a problem. But the biggest problem I see is inflation coming back. If inflation comes back and Fed does a 180 and goes, oh, no, we shouldn't have cut rates, we're going to start raising rates, market will crash. I have no doubt about that because we're already at 23, 24 PE. Historically, that's a very high level. But at the moment, don't argue with the Fed. Fed is cutting rates. Go with the flow. My prediction, 6,500 as a high on the S&P. Finish the year at 6,300. We'll see if I'm still around by the end of the year. Well, you guys will hold me to it. So that's my prediction. All right. So I have 10 minutes, 10 minutes. I'm going to finish with my 2024 results. Full transparency. I'll even post these actually on the community page today with my existing positions. All right. This is the way I trade. First of all, I'm blessed to be in this country. I'm blessed to know what I know. I'm blessed to have learned what I have learned as an immigrant coming here, going to school, going to Wall Street, educating myself, having amazing mentors, life experiences that I can write a book about. I'm super appreciative. And now I'm trying to get into this effective altruism and pay it forward and help others. Okay. So every year, what I do is I have a long-term investment account. Obviously, I have house and a little couple other pieces of real estate, and I have a trading account. Okay, trading account is the one that I go, okay, every year, every single year, I start with $50,000. That's what I want to do. If I blow that account, it's not going to bother me. It's not going to change my life. Okay. But who wants to lose money? I mean, I lose like $1,000 on a trade. I'm pissed off. You can't tell by looking at me if I'm losing or making money, because I'm pretty level. But nobody likes to lose, right? Well, scoreboard is scoreboard. Results don't lie. You can lie to yourself from here to kingdom come. But when you look at your account equity, that does not lie. That's like that's black and white. So this year, I'll be late actually. I didn't trade in January last year, but I started trading with $50,000, 49,800 and whatever, early February. Okay. And here are the results. So let's see how many of you are right. I don't know what your predictions were, but let's see. I will give you guys my assessment of myself. I'm pretty hard on myself, but so here we are. So your account gained 58,820 from January 1, 2024 to December 31, 2024, excluding net contributions. FYI, once I put the money into this account, I don't add money and I don't take any money out. As you guys can see here, beginning value 49,811, net contributions 0, withdrawals 0. I don't take money out. I don't put money in. From 50,000 in, I would say mid-February, I took this account to about 150,000 by June. And I was looking to have like a 6x year. And then the Japanese carry trade debacle happened, and I had a massive, massive drawdown. But then I brought it back to about 135, and then at the end, last week of the year, draw down again. So basically, I ended the year up. Here they are, and here it is. I ended the year cumulative rate of return of 118.09% from January 1, 2024 to December 1, 2024. At the same time, my individual return was 118%, which included a freaking $18,000 drawdown on MSTU. If you guys are following my positions on the community page, although I'm doing fine now, it's coming back. Actually, that's going to help me have a good start of the year. So the other thing I want to show is the return differences, right? Individual, I was at 118%. Russell 2000 was at 11.5%. S&P 500 was 25%. Dow Jones was 15%. NASDAQ was 28%. So I handily beat the benchmarks by 4x-ish, which I'm happy about. And then I found this little tidbit. So these are the top hedge fund returns in 2024 per Bloomberg. D.E. Shaw, 36%. China, Bridgewater, China, 35%. Stater, 25%. If you guys notice, what do you guys notice here? Okay, this is the top 15, 14 hedge funds. I mean, there's Citadel. Citadel was like 18%. Ken Griffin, right? So S&P 500 closed the year 23.8% higher. And what stands out on this list? To me, what stands out is with all their MBAs, with all their PhDs, with all their algorithms, with all their technology, only 3 out of the 14 could beat the benchmark. Now I don't know if I should start a hedge fund. What do you guys think? Should I start a hedge fund? I mean, I know what the problem is. With 50,000, you can make 120%. With 5 billion, it's very difficult to chase return. It really is difficult. But now I'm happy with this year. So this is my assessment of myself. After you go up 200+% in 3 months, 2.5 months, to have a drawdown of 30% is inexcusable. It's trash. So for that, I give myself a D-, if not an F. I let the drawdown go too far. Even I do it. So then bringing it back up, I give myself a B plus, A minus. Last week of the year, MSTU, I was getting assigned shares because selling cash secured puts. It'll come back. That position will come back. I have another position that I have a decent unrealized loss on, which I think it will come back as well. However, I'm very happy with the 120% return. Is it every year? Pretty much, yeah. But this year, this is what I'm going to do. So you guys saw the account value. The account value is about 110,000, finishing account value. I'm not going to take any money out this year. I'm going to leave it because I think it's going to be a volatile year. Volatility is my friend. It's not everybody's friend. You got to be really careful with volatility when you're trading around volatility, high increased volatility. One other thing I want to show you guys here is that, so it's not the returns and beating the benchmarks. So you guys see all these, I look at my stats all the time, which I want you guys to look at. This is full transparency. I don't know how many people will show you their accounts, but I'm showing you goddamn my accounts. So look at my gain rate, okay? 59.62%. That means I was right 6 out of 10 times, okay? And you guys see the transaction averages here, okay? Average gain was 27.8%. Average loss was 21.6%. Now, you guys are going to say, well, how can you double your account or more by doing that? That's called money management. If you're right 6 out of 10 times and you take smaller losses than gains, because I put on 1,008 trades in 12 months. Okay, that's right here. 601 gainers, 407 losers. Okay, that's 59.62%. That's 60%. Okay, well, if you manage money correctly, if you manage risk correctly, even with these smallish numbers, smallish looking numbers, because you're going to have losses, you can more than double your money. I mean, this is all because of money management. It's because of risk management. It's not because of anything else. Being right, being wrong. So, but this year, I think volatility is going to pick up. I think the government's going to do wonderful things. Not that I'm a huge believer in any government, but I think I will have more opportunity. So I'm not going to touch the money. I'm going to leave it as is. I'm going to start the year with 110, and we'll see where I end up. Hopefully, when I'm. Oh, one other thing. This year, I'm going to do the last power hour of the month. I'm going to share with you all where the account stands. Okay. I'm already sharing my positions on the community page every Monday, Wednesday, and Friday. Now I'm going to share the account value, just like I just showed you guys. I'm not going to add any money in it. I'm not going to take any money out of it. It's the same, but my starting point is higher. Let's see if we can double and a half that. So, all right. And we're done. Let's answer some questions. And then I'll go to my charts and go through my watch list. Hey, Jude, how are you? Cheeky Chops. Okay. Cheeky Chops is cussing already. Goddamn advertising. What about advertising? Yeah, Palantir, big winner. Big winner. Techie members. So if you go and become a member, please grab a membership, $10 a month. It's like, I think I'm worth a Big Mac meal. You know what I mean? And you have 4 extra live streams, come on now. Actually, I'm going to create one higher membership level because then you'll have access to my phone number, personal number. But I'm actually thinking of doing that for all the members, but I'm thinking about it. Surging with Sergio, that's right. Yes, Techie B, thank you. See? Grab a membership. Let me send you a t-shirt and join the live next Wednesday. We're back to Wednesdays, 3 p.m. Pacific, 6 p.m. Eastern. Okay. Oh, look at it. Did you do the trade already? Let's see what you say. Place the cash secured 175 MST last night, asking 75 this month. Yeah. No, I mean 70. No, you shouldn't have chased, but now it's higher. I don't know where it's at. I think it's like 960. You could have always done a higher strike. You didn't have to be stuck with the 7.5s. Look, man, at least you attempted it. Okay. Connie Shea says, take a beat, chase it. No, don't chase it. You will always get an opportunity. Yeah, I figured 7.5 strikes. Yeah. Yeah, 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 yeah. Taking January 10th, 9.5. Sell puts for 70 looks tempting. 9.5 stock. Well, okay, look, Edward, you're aggressive. I know you are. MSTU was down to like 6 and change. Okay. 9.5 is up already like 40%. I know I own 4,500 shares and I'm going to own another 500 shares as of today, unless I cover it by, you know what I'm saying? Connie, I'm not, yep, please don't. Do not have FOMO. Do not have YOLO. Do not do any of that stuff. Check the emotions at the door. It's just a business, man. It's just a business. Yes. Nobody mentioned it. I found it by luck. We were looking at it in the members live. I'm like, I wonder what this thing is. I'm like, huh. I set it all up. I set all 2 of them up now with my filters. That's going to be very helpful. Edward says 120%. LOL. How'd you know? You have access to my account, Edward? You are dead on. Sean, I'm better than 22%. I'm disappointed, buddy. Come on now. If I can't beat the benchmark, then I'm worthless. Then I should not be doing this. That's with a ridiculous drawdown. I really, like, when I went up 210% or so in like 2.5 months, I was like, yeah, I'll end up a year at 306x. Like, last famous words. I do it, so you don't do it. Jab says 38. I beat that handily. Thank you, though. Techie B, 120. I may have said that at members live yesterday, so you guys cheating. You guys have an advantage over, like, Jude. Jude goes like, yeah, he just maybe beat the benchmark. No, I did a little bit better than that. Daniel was close, and Daniel is not even a member. I will take 140% this year, Daniel, for sure. Because my starting point is higher now. You know, the problem with this is you know, trading with 6-figure account is easy. It gives you holding power. It gives you, you know, staying power. It gives you more choices. You're open to all kinds of strategies, you know, with their derivatives and indexes. You could be as conservative as you want. You could be as aggressive as you want. The thing with that is, you know, I understand why the hedge funds and mutual funds cannot beat the benchmarks, because they're dealing with billions and billions in cash, billions and billions in investment dollars as assets under management. If you gave me like I don't know, I think my limit would be like, if you gave me like $500 million, I would struggle. I don't think I would get to 100%. And anything over $1 billion, I don't think I can. I will still beat the benchmark, I'm pretty sure. But it won't be like 100, 120%. I don't think so. It's very difficult to do that. Okay. Well, that's the Costco rotisserie chicken. Yeah, but that's come on, Daniel. You know what I'm talking about. Okay, here's a member. Says, learned a lot since the channel started. Inflation, currency debasement, investment, and more. The world is making more sense now. You got it, buddy. You bet. Yeah. You know, you don't feel it, but they're doing it. Might as well understand it and protect yourself from it. What else I can do? I don't know. Right? That's it. I love this. See, this is why I'm doing this. Modern monetary theory, which they claim that no. It is needed, yeah. As long as look, I am not against debt. I have credit cards, I have mortgage, I have debt, manageable debt. I'm not against that. And I'm not against new debt. What I'm against is when the reason we okay, so we left the Nixon era, during the Nixon era, we left the gold standard. So we couldn't put currency out more than what we had in storage in gold. That's called the gold standard. Once we left that, what happened to the economy? Right? To the sky. How? Because the money we were borrowing, okay, because that's why all corporations borrow money. You want to increase your return. You want to increase your top line, consequently, your bottom line. What happens is that, though, if you're borrowing $1, your ROI on that dollar should be at least 1, if not double, triple X. Initially, when we were borrowing money in Reagan times and cutting taxes and doing, deficits were going higher, because this goes back a while. Our ROI on that single dollar borrowed money was 4X. You know what the ROI is on that dollar that we're borrowing, those trillions we're borrowing today? It's 45 cents. Think about it. We're not at one-on-one. We're losing money. So while that has gone to 36 trillion, to be 37 in 75 more days, our GDP has exploded, right? Our GDP at the moment, last year GDP was $27 trillion. Trillion. If you look at the GDP growth, it's been phenomenal. That's because initial first 10, 15 years when the debt was manageable, we were getting 3X, 4X GDP growth out of that debt. Well, now we're not getting anything because we have all kinds of stuff going on, right? We're down to 47 cents, 45 cents. Stop it. That's when you stop at 1-to-1. You stop, right? Well, 27 trillion GDP. We're at 36 trillion debt. We're running 130% now. Highest, I think, was during the pandemic at 133% debt to GDP. But it's got to end. Stop. Okay? We're never going to pay that back. I think it's going to keep going higher. But what we need to do is we need to stop it from going up to $3 trillion a year first before we can lower it, right? Yeah. Yeah, exactly. That's about it. $12.99 each item. I looked a while for a more advanced community you were looking at yesterday. No, I didn't create that list, Mojo. I didn't, buddy. Actually, maybe I'll do that. Yeah. Hedge fund under surge management. Yeah. Okay. Cool. I would never do that. There's so much responsibility there. Stephen Brown says, "What is your year-end 2020?" Oh, I said it. It's gonna. This year we're gonna see 150,000, but year-end prediction 134,000. How about that? If you want to stick me to it, there you go. Mojotronics is a little confusing at first, but Robin, yes, go to Robinhood Mobile, is right there. Create watch list and scanner, and then put your filters in, and it'll pop out all the stocks. I have 2 now. I have most advanced, and I have 52-week highs. Beautiful. Oh. Well, okay. Well, I'll update that next week. I ended that account at 2,800. I didn't even trade it after like first 2 months. I had to pay attention to my ridiculous drawdown that I was experiencing on the actual account, but I ended the year at 2,800 bucks. I started with 1,000. Will I trade that this year, man? I have so much to do that I'm not sure, honestly. Probably, yeah. I mean, so it was okay. It was like up more than my actual account, but then I have to pay attention to serious money as opposed to a little Robinhood account. But it's still open. It ended the year at 27 or 2,800. Yeah. No. It's simple. It's right there. It's all there. Okay. Palantir will go to 125. Possible. It's in an option. It's good. Overstock had a good day. I think 60 was probably average, but then it's in a downtrend. I'll just wait until it settles. I would sell like cash secured puts on Uber, 60 puts maybe, month in, month out. And if I get assigned, I get assigned. So I'm a buyer at probably 55, 58. So if you sell puts a couple times, cash secured puts, a lot of people call it naked puts, You get assigned, you get assigned. You don't get assigned, you just collect the premium, be happy, and go home. Yeah, 55 is probably my buy point on Uber. I think its AV thing is overblown completely. You know, drivers are not going anywhere. All right, so let's add this to the stage. So this is my trading account. I'll go through some charts and answer some more questions and say goodbye to you all. So pretty good year, 118, 20%, whatever. Overall, I give myself B minus. Very disappointing after going up 210% that I decided to put the gas on. That's what happens. You get super aggressive and you pay the price for it. But then I brought it back, so I don't know. Yeah, B minus. Maybe at the end of this year I'll give myself an A. I'm hard on myself, so it's all good. All right, so hopefully you guys can see this. Can you? I hope so. All right. Oh my God, Bitcoin must be melting up. All right, I don't have too many positions, people. I have 14,000 shares. I'll put this up. I have 14,000 shares of Werewolf Therapeutics. I keep selling calls on it. It's up about 11, 12 cents. Holy crap, is it really? Wow. Okay, cool. This is wonderful. I have 45. Well, I guess I'm not going to get put now. I have 4,500 shares of MSTU. It says this is one thing I don't like about Thinkorswim, which I was forced to switch from Schwab that I've been using for 15 years. It doesn't adjust for the put credit that I'm collecting when I sell puts. It shows 11.55 cost basis. Not a chance on the planet my cost is 11.55 because I sold 11 puts at $1, 10 and a half puts at $1. I don't know, 10 puts at about 80 cents. It should be like lower, but it says that, so I go with that. Holy crap, it's 10:22 now. Well, what do I have? I put out the calls already. As you guys can see, 4,500 long shares, 25 short. January 17th, 11 calls. And 11 and a half calls. So if it's over 11 or 11 and a half, I will get called away. And that's the end of that story. Oh, TKB, you should have chased. It's easy to say now. Yeah, so, and then I have some ROT calls, 60 calls. So this year, what I'm going to do is I'm going to do a lot more cash secured put selling on stocks that are uptrending, collect premium. I'm a premium seller as it is. I'm not going to take too many directional bets with options. I will definitely take more directional bets with equities. So that's the strategy for the bigger starting point account. Let's see what the markets are doing. Obviously, this is the S&P 500. As you all know me by now, hopefully, I don't draw too many lines. It creates nothing but bias. Looks like we're double bottoming here. Big update today, obviously. So pretty good. Triple Qs. I mean, market's in an uptrend, man. What is there to question? 200 EMA is not even close. Triple Qs bounced off the 50 EMA. Apple was having a couple of tough days. It's right on its 50 EMA. I will probably start selling some cash secured puts on Apple. Pull back to the breakout line at 238, 240. This is where you need to get in if you're going to get in. Pull back from 260, right on its 50 EMA. All the Max 7 is doing well. NVIDIA is breaking out again. Yeah, I love the chart now. It did its sideways action, just like here, breakout. I mean, it's a good looking chart, man. Let's go to my list. Okay, a couple of small stocks that we've been watching, if you guys have been following me. One is Archer Communication. Holy crap. This is what I'm going to do this year. I'm going to trade a lot more equity of these things. They have options, but I'm not going to trade too many options. Look at that thing. Just hug that 20 EMA. Every pullback, should have been bought. I like the same stocks, but then with the newfound Robinhood high list, 52-week high list, I think I'm going to have a lot more stocks on my watch list. Affirm came right on this correction, came right down to 50 EMA at 60. We're at 65 already. Cash secured puts, obviously. AI came right to the 50 EMA. This is not a rocket science, people. Just have my stocks are set up with three things. Obviously, bar chart, right? Green days are up, red days are down. 20 EMA meaning exponential moving average, 50 EMA, and 200 EMA, yellow, blue, and red, and a Bollinger Band with a 2% deviation from the with the middle band, which is the 20 SMA, period. That's it. I obviously watch volume, and on the bottom, I have MACD. Other than that, I don't draw lines. I don't pay attention too much. I'll just go with the flow. We know what's been going on with the quantum computing stocks, but those are all neither here nor there. Avago, big winner. Nancy Pelosi. Catalyst was the earnings, broke out, did its normal little pullback and then retest the highs, I'm pretty sure. I'm paying very close attention to the Chinese stocks at the moment. Even with the tariff threat, I think is mostly saber rattling. I think it's going to create massive opportunities this year in like Baba and JD and Baidu and companies like that. One of my big winners last year was Kava. It was a 5x for me, a year and 5 months actually. It's down to I will start selling cash secured puts on this. I definitely want to own the stock. High was 172 on the last earnings, down to 115, down to its 200 EMA. If you're going to buy it, you're going to buy it right about here, 106 to 110. So if I sell 110 puts, I will either get assigned or start collecting premium. Definitely want to get back into Kava. Love the food, love the company. Carvana is getting shot because massive article. I mean, it broke down anyway. Look, if you look at Carvana's, 50 EMA broke at 225. We're down to 181. It was a Hindenburg research said that this is the biggest Ponzi scheme of all Ponzi scheme. Father-son fraudsters running the company, and today we're down, I don't know, down $20, down to 181. I was also lucky I was lucky enough to have picked this in the 30s. I sold this about 5x as well. Then it ran another 60 points, but it's all good. Let's see. A lot of the this is I mean, all you guys need to do, man, just find some uptrends and just trade. Don't be afraid. Archer Communications and Joby, right? Those are the two EV stocks. That went sideways and then just breaking out now. These are all the ones that they do the electric man carriers, human carriers. They're basically drones, but carry humans. Big winner this year was Lunar. Love that company in the Ace. Look at that, right? Just find uptrends. Go back on the power hours. Check out my watch list. Check out the stocks that I've been talking to you guys about. MicroStrategy up 13%, up $40 today. Interesting. I mean, it broke down completely. It took under and now it's bouncing back to the middle band. That's why MSTU has gone bonkers today. So MSTU is the 2x of MSTR. MSTR is up 13%. MSTU is up 27%, 26.5%. Yeah, I don't mind. I have 4,500 shares. Yeah, I'm pretty sure I'm not making money on this, but it's a good start of the year. This was part of the reason, by the way. I was getting assigned a 12 and a half, 12, 11 and a half, 11, 11, 10 and a half, 10. And I'm like, okay. And then it got down to like, what's the low on this thing? Literally like 680, $7. And I'm looking at it like a 3-point loss on 4,500 shares. That was that last 15K I gave up right at the end of the year. But then now it's going to give me a good head start for the new year. So I'm cool with that. Nvidia, again, I said breaking out. Oklo, gosh, that is it really? Why don't you give me a chance? Yeah, this is nuclear stocks are getting hot again. That's one. NNE is another one. Love these patterns when they go sideways and then they decide to break out and they just go with the flow, man. What else is there to say? Palantir, is it 80 really? Gosh. Oh, actually, it was higher. It was 85. Yeah, just it's gonna go sideways though. Don't expect much. I'll be selling calls on this if I had it. Qubit is quantum, right? Let's go keep going sideways. 20 EMA will catch up. It'll take the next leg up. Patience. Rigetti Computing is another one. Look at these charts. Come on now. Rivian up $3 today. Is it really? Yep. Just went up sideways. I mean, look, man. Rocket Lab in the world of lunar. Yeah, these are all foreign names to you guys, but you know, you guys got to find them, man. Once you find it, just trade it. Serve Robotics, the bug eye robots in LA. Not a 52-week high, but big move today. You know, look at the way it trades off of the 20 EMA, people, right? It goes up, pulls back to 20 EMA, above it's 200, above it's 50. It's a simple thing. I don't know. Maybe it's simple. Too simple to me. Soundhound, another one that we were looking at. I was talking about at $4 or $5. Yeah. One thing that's bothering me, and it should bother you, is that I talked about is TLT. What's TLT? TLT is the inverse of 20-year note ETF. So if TLT is going down, that means interest rates are going up. Look at this TLT. Look at this chart. This is horrible. This is the day, by the way, right here. The day at 101.64 is the day Fed started lowering the Fed funds rate. We're down to 87. Market's raising rates. Market says, Fed, you're full of boo-boo. We're not going to pay any attention to what you're doing. We're going to keep raising rates. And yeah, Tesla is having a nice bounce back today. I mean, that thing went up to 488, pulled back to 360, no, 370-ish yesterday. Car sales were disappointing. A little bounce back today. I still wouldn't be a buyer. I think it needs to settle down right about 350, 360. Then I'll sell some cash secured puts. Another, what else? Z. This is shaping up reasonably okay. I may sell some puts on Zillow. They keep cutting rates, but the bond market's raising rates. That's why this thing is in its own way. And last but not least, PayPal. Above its 50, hugging the 50. Cash secured puts is the way to go. Hopefully you have some questions. I'll answer those, and then I'll say goodbye. Okay. Ubria, will you go to Tasty Trade? No. Will I go to Tasty Trade? No. What do you mean, will I go to Tasty Trade? You mean trade with their platform? No. Oh, okay. Well, one of my members says I've been joining it. Cool. I won't know. I don't think they can teach me anything. Not that I'm against any of you doing it. I think I know enough. Yes. Yeah, I mean, pull back. Actually, that may become a meme stock, which I don't want to do. But Roaring Kitty talked about it, I think. It was a big day a couple days ago. Yeah, I have a full position on. Okay, so on my long-term portfolio, I have two stocks, full position. ELF. ELF is Eric Larry Frank, and Unity Software. Symbol is U. Full transparency. Yes. Okay. I'll take a look at it. I mean, you know, I have my own tasty trade here. That's about it. So, you know, I'll go back one more time. So join me every Monday, trading with Sergio, 10 a.m. Pacific, 1 p.m. Eastern. Every Friday, Power Hour, 10 a.m. Pacific, 1 p.m. Eastern. Every Wednesday, 3 p.m. Pacific, 6 p.m. Eastern is the members only live every Wednesday. If you decide to become a member, not only you will get that extra live stream, but you will get a free t-shirt, $30 value, shipped to you for free as well. Just send me your t-shirt size and your physical address and you'll get it. It'll look exactly like this, black and gold and white. It looks sharp. You can wear it anywhere. Knowing your worth is where life starts. You got to know your worth, okay? And what else? That's about it. So it was a good year. 120%. Could have been better. Should have been better with, but then ultimately, if you look at the numbers, 6 out of 10 and double 120% is how you do it. How you do it is you just take smaller losses than your gains. And if you do have enough activity, which I did, 1,000 trades, right? That's how you double your money or more. But money management, risk management is key. And I give myself horrible grades for getting extremely aggressive when I went up 200% in couple 3 months. But then, you know, you've been through drawdowns, but it shouldn't have allowed that much of a drawdown. For your drawdowns, I would suggest don't allow more than 15% of account equity. Shut everything down, go away for a week, refresh, come back. Don't revenge trade. Don't say I'm gonna get you. Don't say I'm better than the market. I know better. None of that BS. Please don't do that. You will break your account. You know, but many do. Many blow their accounts. In fact, I have a great video coming out today. It's about gambling addiction. How gambling addiction is skyrocketing in this country because of zero DTE gambling. It's literally pure gambling. But we'll see where this year goes. So at the end of each month, I'm going to share my trading account with you guys. I'll share with you guys what positions I'm opening in the investing account. Bitcoin is Bitcoin. I'm DCAing into Bitcoin this year. Every Monday morning at like when I wake up, I'm putting $100 at whatever Bitcoin is at. I don't know. I don't know now. Monday morning it could be 105. I'm going to buy another $100 worth at 105. I'm going to do it every week. So that's it. Going forward, at least for 2025. Okay. What else? I don't know. What else do you guys want to know? You guys want to know anything about that? Great question, man. Yes, he was gracious enough to have me on the stage a few times. Quant data. You know, Monday. How about that? If you're there, come on down. I'll join for a few hours on Monday until I do until I do trading with Sergio. I like what they're doing. I really like what they're doing. But I've done what I've done for so long. That's like teaching an old dog new tricks. I'm not opposed to it whatsoever. So yeah, there may be a hybrid version of me this year. Look at more data points, look at more trading action, then just look at charts. Obviously, ultimately, charts are charts, right? Charts are, we're hoping that what happened in the past will happen again, and it does. Patterns do repeat. However, it only shows you the past. What quant data is doing, they're looking into the future by looking at data analysis. And I like what they're doing. I really do. So, you know, I'll go back on Monday. I think William was also on vacation. So I'll go back on Monday. And I'll send William this video. I'll say, like, how'd you guys do? I know they had a rough patch there at the end of the year when the market took a huge hit, actually, after the last Fed cut. I like what they're doing quite a bit. It's free, by the way. Quant Data, if you want to go to their Discord, it's free server. You don't have to pay anything. obviously, if you decide to join Quant Data, I think it's $60 or $70 a month subscription. I think it's well worth it. But then before you do any of that, please go learn your Greeks, because their language is their data analysis is very Greek oriented. Option Greeks. I'm not talking Souvlaki. I'm talking about option Greeks, delta and gamma and theta and vega and vana. You better understand what they are, because if you go to Quant Data and listen to them, there are some ridiculously sharp people out there. And I understand it, I'm like duck the water, but if you don't know anything about those things, you're just going to get bored. And you got to know the Greeks before you go to, well, you don't need to know the Greeks before you go to Quant Data, but when they're talking, you want to understand what the heck they're saying. So might as well learn the Greeks, the correlation, the relationship between the Greeks, because that's what they're analyzing, right? They're analyzing gex and dex, and if you'll do better. But then William does do live trading. He puts out a few 0DT or weekly one-day DTE option trades and things like that. He's done well. I think he said last year was like 78%. So he beat me. 78% is ridiculously good. I was at right at touched hair under 60%, but I did 120%. So equity-wise. So let's see what he did. Equity-wise, you would expect him to do better with 80%, right? I'm happy with my year. Could have been better, should have been better, but I'm happy. And then this year is starting well, because MSTU gets back up 11, I get called away, then I'll be up already 15% for the year. So I'm all right. We'll live, we'll continue. So much love. Stay healthy, please. A happy new year, healthy new year, prosperous one for all of us. And I know the country had a tough couple last days with all the terror stuff going on. Have your head on a swivel, man. We live in tough times, and you can't just put your head in the sand and ignore it, but also you can't be too anxious about it. Life is short, play hard. That's my motto. I think I'm going to do a t-shirt like that. Life is short, play hard. So anyway, join me every Monday, Wednesday, if you remember, and Friday. Much love. My hat's off to you all. Hope you all did better than I did in 2024. And okay, you have a question on GME. Depends if you have the stock cover call, but then this is like GME is just such a difficult thing to do. Well, okay, you want my opinion? I'll give you my opinion. I did a video about GME a few months ago, and I got a lot of hate out of it, but a lot of people watched it. I knew what was going on, right? The gamma squeeze ended, all the bag holders, stock has moved up from 20s, right? Sideways 20, 21, up to 30 now. 50% return, you can't beat it. I don't think that the the squeeze is ever going to happen again, as a lot of GME people are expecting. Company's in a lot better shape. $5 billion in cash, $4.5 billion in cash, no debt. He should go do what Michael Saylor is doing. GME will double. Seriously, they should go buy Bitcoin. I don't know why. I don't know why he's sitting on cash and collecting 4% on T-bills, while Michael Saylor's MicroStrategy has gone up 350% this year. I think that would be a no-brainer for GME. What's his name? Daniel Cohen, whatever his name is. Do that. But if I had the stock, I would do cover calls. I don't think it's going to fly. Premiums are still high, reasonably high. Implied volatility is still high. If you don't own it, yeah, cash secured put, yeah, CSP would make sense. If you own it, if you intend to own it, obviously, Okay. Oh, you got caught on the way down, rode it to 20. Now you're coming back. Yeah. I mean, your price is now nowhere near what it is. So, yeah, just gotta wait, man. Or sell some cash secured puts, start lowering that cost, sell some calls as well. Way out of the many calls, month at a time. Sell some 40 calls. Look, man, I don't think that parabolic is going to happen again. Okay, there's too many shares out there now. Way too many shares. Granted, there's still a big short position in the stock, but that train has left the station. I don't care if Roaring Kitty says this and that. They have issued so many shares, man. You know, but they straightened the company out. The company was on its way out. The guy straightened it out. You should go buy Bitcoin. You will do well. Yeah. All right. So I hope I answered your question. Why don't you become a member? We can talk face to face. Anyway, love you all. Thank you so much. Thank you for the support. Give it a thumbs up. Share the videos. Share the knowledge. I can do so much. If you have any input on how to get this going better, I'm going to have a lot of collaborations this year, which I'm really looking forward to. So that's it for this Friday. I'll see you guys on Monday. And Trading with Sergio.